Good morning and welcome to our quarterly earnings call. So this time is a virtual event once again from the COVID, as everyone knows. So by way of introduction, myself, Arad, and to my left, Kun Manop, our CFO. We have a number of executives joining us on the call as well. We have the two presidents, Kun Apipan and Kun Sarat, on the call. We have our chief economist, Kun Yan Yong, who will be sharing with us the macroeconomic outlook. We have our chief risk officer, Kun Anucha, also on the call, and a number of other executives. So we submitted the results yesterday around noon, so you probably already have a good sense of where we are in terms of the performance, and I'm sure you have a lot of questions. So what we'll be doing is that we'll keep the readout relatively brief. We'll structure into three sections. The first one is, kind of our perspectives on the macroeconomic situation, recovery, and what's the impact for the country. I think I'm sure you've been following all the news and been overloaded, so we'll keep this brief as well, around 5 to 10 minutes. Then our CFO will walk us through second quarter results that you have seen. So hopefully it will be not a detailed one in terms of what we need to explain. And we save aside enough time towards a third part, which is the last part of the call on the Q&A. And I guess we follow the exact same protocol last time. You can submit the questions offline as well as online. So with that, we'll start. Yan Yong, please take it away.
Thank you, Kun Alak. Good morning to everyone. I'd like to provide a brief macro update on the impact of the COVID, the third round of COVID on the Thai economy. So let me start from. Hope everyone see the slide fine.
Yeah, we can see it.
Yep, thank you. So let's start from the health situation, the COVID situation. As you may know that we're in the third outbreak of the COVID. That's actually started in April, but have accelerated in terms of daily cases towards June and continuing in July. So now the peak is reaching around 13,000 per day. What is concerning here, and it will have a strong implication on the economy, is in terms of the new cases have outpaced the recovered patients. So that put a stress on our healthcare system. And one of the bottleneck here in Thailand is in the access of the testing. As you can see, the testing have been kept, the PCR tests have been kept relatively constant throughout this past couple of months, while the positive rate is climbing right now to 12-13% per day. So that point out to the fact that we could see more of daily cases being reported with now the new rapid tests have been introduced into the system. In terms of the vaccine, here on the left-hand side, I'll provide you with the updated in terms of the acquisition of the vaccine in Thailand. As you may know that the two main vaccines for Thailand so far is Sinovac and AstraZeneca. For those alternative vaccine, whether it's mRNA or subunit protein, that will become later in the fourth quarter. Our estimate is that by the end of third quarter, there will be around 35 to 40%, at least one dose. People who have full dose or two doses would be about 20% of population. This ratio will rise to around 60% towards the end of the year. But I think what's important is that during the third quarter, we probably will not be able to expect but much benefit in terms of herding immunity to come in the third quarter this year. And that's why it's important for the government to impose a stricter lockdown measure that step up actually this week in 13 countries, including Bangkok and metropolitan area. So far, the government have been trying to avoid national lockdown to prevent significant impact on the economy, to lessen the impact on the economy. But we have to see how this go. We at EIC have utilized the SIR model to try to get the sense of and get some prediction on how daily cases will evolve over time until the end of the year. And our read right now, we expect that in the base case, which assume somewhat partially effective lockdown measure. So that's the yellow line. The peak, we might see around 20,000 cases per day. But most important thing is that we now expect that it will take up until the end of November before we can bring down the case down to less than 100 cases per day. Okay, so that's in base case, right? And as you can see that the rapidly increasing trend of the COVID case in Thailand has to do with the fact that now the Delta variant is a dominant variant in Thailand, which is a lot more transmissible than the previous variants. Now let's look at each component of the Thai economy to see how it will evolve the rest of the year. Let's start from I think the bright side on the export. We can see the Thai export have continue to expand relatively strong in line with other countries in the region. And on the right hand side, you can see that this expansion to export so far have been relatively broad-based. So you can see almost every key sector of export products have shown significant increase. Obviously, part of this because of the low base effect last year. But nevertheless, even if we look at the level, the trend of the level also quite strong and robust. So now we expect that the export value this year will expand around 15%. 15% we already take into account some of the risk that could happen to the cases, the infection cases that being reported in some of the manufacturing cluster in the country. Obviously, we take some of this concern, but we didn't take all. So there's still some downside risk to monitor if the infection continue to trouble in terms of the worker in manufacturing cluster. We could see some more downside risk in terms of the export performance the rest of the year. Now, in terms of the tourism sector, actually EIC have bring down our forecast for foreign tourists down to 400,000 tourists since June, right? So we brought down throughout this year, and now we also need to report. Now the latest assessment is we're going to have around 300,000 tourists this year. So that is just a tiny percentage of what we used to have, around 40 million in 2019, and even compared to last year, 6.7. And the reason why it's so the number is so small, even though the government have been trying to opening up the country. For example, the Phuket Sandbox, we have started since July 1st, but the figure of tourists so far for the first 19 days is around 8,600 persons. So as you can see, which is in line with what EIC have been expecting all along, that even though we try to opening up, but most of the country, especially country that is the main source of tourism to Thailand, they all still are very cautious in allowing their citizens to travel abroad. For example, UK still have the traffic light system that require all the country classify into traffic light, green, yellow, and red. And for example, Thailand is in the in the yellow group. which require that once UK citizens travel back from Thailand, they will have to be quarantined at home for 10 days. So this is some of the example that why we expect that the recovery of tourist sector will probably we need to wait until next year when we achieve herd immunity and things get into more normal in the country. Now, if we look at the domestic consumption, so the high frequency data that have been tracking is the Google Mobility and Facebook Movement Range Index. And both of these indicators indicated that during the third round of outbreak, it's a lot more severe than the second round, which is happened in the first quarter of this year. The trough might be a bit higher than the first round of outbreak last April when the government imposed national lockdown. But we believe that the impact of the lockdowns will last during the third quarter. So that in some form, okay, so the government might try to experiment with selective lockdown, but there would be some form of lockdown mostly in the third quarter. So we expect the impact on economic activities, economic movement to last, to have impact. And so the impact of the third round on the consumption could be close to the impact of the first round in terms of duration that is much longer. And another thing that I want to point out that even though right now the lockdown have been imposed mainly on the 13 provinces, but if you look at the Facebook movement, many other provinces, whether it's Phuket or Rayong or Chiang Mai, which are not under the 13 provinces being locked down, the movement also show the declining trend in line with the country as well. Obviously, the red line is the Bangkok, which is the main cluster of the COVID case this time. So it is among the lowest. And so what I'm trying to say is that the impact on consumption does not come from just purely the lockdown measure, but also come from the fear factor as well, that people try to avoid going out to places. Now, another feature of the impact on the consumption, which we have been tracking closely in terms of uneven impact. Okay, as you may expect, and actually we have seen since the first and second round, all the face-to-face activities are declining, while the digital online activity is increasing, whether it's virtual meeting, food delivery, e-commerce, as well as home appliance, because people are staying at home more. In terms of the job prospect, we look at the data, the high frequency data from JobDB. So we have seen the job posting, overall job posting have been declining compared to the pre-COVID period last year. But the area of work that have been expanding is the e-commerce and logistics. So together, these two graphs just like to underscore the importance of the emergence of online or digital activities in the Thai economy, which prompted by the COVID. But I think it may this behavior may stay and become a new normal going forward. In terms of the impact of the consumption, this figure is private consumption projection without any government stimulus. So just pure private consumption. Based on the information that we provided you so far, we try to take into account the impact of the lockdown and the fear factor, and also some of the impact on the scaling effect of the Thai economy, whether it's household debt or the fragile condition of the labor market. So we expect that the private consumption will contract further in third quarter before gradually, slowly in the fourth quarter, as the cases of COVID likely and in the best case gradually be contained in the fourth quarter. Okay, obviously the implementation of government measure will be very important, and here I just like to highlight that that for the third round of outbreak, the government will already commit to inject around 2.6 billion baht. We think it's not enough. So we actually, in our base case, we add another 150 billion. So that will toward count totally of 200 billion baht that will be come out from the 500 billion royal decree that have been enacted in the second quarter of this year. I think government still have adequate room in terms of government stimulus based on this 500 billion royal decree. And if government need to stimulate more, I think there's still room for government to borrow more. Our public debt by international standard is still lower compared to other emerging market economy. But it's something that the government need to plan and explain and communicate to the public very clearly of the intention. So the bottom line is based on the impact of the COVID, we have revised downward our GDP forecast for this year from 1.9 to 0.9%. And the impact will felt mostly in the third quarter. So we're gonna see contraction in the third quarter. But this also depends on how much the government will inject. If the government inject more than we expect, then that could help to provide some a little bit more cushion to the consumption as well. So the risk factor, I think, is continue to be on the downside with the delay of vaccination or taking longer time for the outbreak to be contained. That's the main concern. At the same time, we also need to look at the risk from supply disruption that can impact on export performance as well. So these are the picture that I like to update with all the analysts this morning. Thank you.
Thank you, Dr. Yan Yong, and good morning. Let us now turn to second quarter result briefing. For this quarter, we believed we deliver a decent set of results under this very difficult environment that you have heard already from our chief economist. To begin with, relief program came down in the quarter, and we believe that asset quality is still well under control. And for this quarter, we started to focus on long-term restructuring solutions for our customers. And the principle or the idea is to increase the eventual debt servicing ability for our customers, and for us to avoid or minimize the staging cliff effect for next year. So this is going to be a bank-wide undertaking for the second half, and we expect to complete this exercise by the end of this year. However, for now, we maintain our provisions at an elevated level at the moment for this quarter, at about 10 billion baht per quarter. And we kind of believe that if the macro situation doesn't get much worse from here, we expect the current provision level to be an upper bound for the rest of this crisis. We have considered adequacy of the buffer that we have built all along in this crisis. In our low loss reserve, in particular, the discretionary management overlay. And we also consider the proactive NPL approach that we have done so far. And the long-term solution that I just mentioned will be very, very crucial to achieving these results. On the second quarter results itself is very much more of the same. Fee income continues to be the focus, our focus, and cost control continues to be key to delivering stable results for the bank. And digital capabilities is something that we continue to grow. In the future, given our strong balance sheet, we continue to look for inorganic opportunities. So all in all, we believe that asset quality is still very much under control. We have still risks and uncertainty right now the third wave, which has shown no sign of abating, and the number of cases per day is still rising. But we will manage our asset quality and our loan book, and also believe that we will continue to deliver stable results going forward. Now, let's go to the next slide on the relief program. As I mentioned, as I pointed out, relief program dropped to 376 billion baht in the second quarter, and it is about 16% of our total loan portfolio. If you recall, in the first quarter, our relief program customer actually ticked up a little bit to 429 billion, and the main increase almost entirely came from retail portfolio. For this quarter, we believe the risk of the relief programs continue to be well under control. The decline that we observed in the second quarter was very much across all segments. For the retail customers, almost half of the customers in the relief program saw their programs expiring in the quarter, and the number of reapplication or new entry into the program was much smaller than in the first quarter. So that's why in the retail segment, we saw a meaningful decline in the relief portfolio. And for those who still require further assistance, we have been trying to transition certain customers on holiday payment program into long-term restructuring. So as a result, customers on the PO holiday payment track actually reduced versus the first quarter. And on top of that, we got some recovery in SMEs, in particular export-oriented SMEs. So these two factors has helped improve slightly our payment profile when the customers exit the programs. So in the second quarter, we always assess the payment profile when customers exit the program. We still can say that well above 60% of the exiting customers still pay regular terms. That's what we want to highlight. It has always been above 60%, but this quarter the percentage ticked up a little bit more better than in the first quarter. So on an overall basis, we can still say that about 90%, or in fact slightly above 90%, still make payments to us in some form or the other upon the exit of the program. So I think with this payment ratio or payment profile, we believe that the relief portfolio is under control. In particular, when our portfolio came down and condensed to this level as time goes by, and we can still maintain this payment profile. So I believe that this is a rather satisfactory results. Then for customers that remain in the program, 376, the majority is still retail customers, and then followed by corporate and SMEs. Right now, roughly 40% is on holiday program. So and then the hotel segment is still the majority for the corporate segments. So of the 376 billion baht in the relief program, hotel customer was about 80 billion baht. The other thing that I want to highlight on the relief portfolio is that the staging that we have for the relief portfolio, stage 2 and stage 3 combined was close to 20% in the relief program. So this is compared to less than 10% for the normal portfolio. So we believe that the staging that we have in the relief program should already be quite conservative. And going forward, we will rely on the comprehensive debt solution that I just pointed out earlier to ensure that we have eventual survival, high eventual survival of our customers in the relief portfolio. Now, as you may be aware of, the Bank of Thailand has required banks to provide 2-month debt holiday program to retail and SMEs customers, and these are only restricted to customers in high-risk zones. We just opened our system for this enrollment again in the past 2 days, so it's still early. We are assessing and monitoring this very closely. Judging from the situation right now, the relief customers in the third quarter may increase versus second quarter, but we believe that on the overall basis, the risk is still under our control. So let me now ask Khun Anucha, our Chief Risk Officer, to see if he has any more color to add to the relief portfolio and also to brief us on the comprehensive debt solution.
Good morning. Can we have the next page? Yeah. As Khun Manov was saying, we think that the BOT 2 months moratorium is just a short-term relief measure. So to provide the long-term solution for our borrowers, our board has approved the framework for long-term restructuring for our customers. The principal objective of this exercise is to help most of our customers to get through this pandemic and be able to revive their business once the country and the economy are reopened again. This would involve reprofiling their debt repayments according to a very conservative income and cash flow projections, which would build in a fairly large debt service coverage ratio buffers for our customer to withstand any shortfall from slower than expected recovery. This restructuring will result in extended repayment period beyond our customary underwriting standards. It will include lower interest rate or step-up interest rates and additional loans to jumpstart their business when the economy reopens. These loans would be partly funded by the BOT soft loan and partly covered by the Thai Credit Corporation guarantees for SMEs. We hope that this long-term debt restructuring and by realistically matching customer cash flow with the debt servicing, we expect to see the significant reduction in the default risk, which would also translate into lower NPL formation and credit costs over the next year, as we target to complete most of this deep restructuring by the end of this year. Anyway, the bank will continue to be very diligent and prudent when it comes to risk monitoring of our portfolios and maintain appropriate loan loss reserve, reflecting the evolving PD and LGD of the portfolios. Our portfolio risk analytics team continue to refine and improve our models to cut and dice the portfolio from various dimensions into different risk buckets with better insight into their behaviors and likelihood of defaults. So in addition to the classification and provisioning for the restructured debts according to the BOT guidelines, we will continue to do our qualitative provisionings and adjust our management overlay to make sure that any residual or tail risk are adequately provisioned for. Thank you.
Thank you, Khun Anucha. So let us continue to our discussion on the second quarter results. I hope you have good color of what we plan to do for long-term debt workout for our customers as a long-term solution. Now, just briefly on the digital side, we continue to build our digital capability, and the main platform, Robinhood, has gained good momentum, in particular during this lockdown again. The number of orders per day now is above 100,000 orders per day. and we believe that the user base and also the popularity has been rising. So on an overall basis, digital users right now about 16 million on a combined basis for all our digital platforms. And digital revenue is still small, but it has been rising, roughly 4% of our total revenue. For the second quarter itself, we believe the first half results is quite solid, but nonetheless, second quarter was weaker from the first quarter. Pre-provisioning operating profit for the second quarter grew 5% year-on-year. And with this, we still maintain our resilience non-NNI growth. We also have some still robust non-recurring non-NNI. NNI itself remains under pressure, as I will explain later. Expenses is still under control. Cost-to-income ratio stay at low 40s. Credit cost 175 basis point for the quarter. It was a drop from the peak level that we observed last year, though this level remains elevated. New NPL formation is basically about less than the previous quarter. In this quarter, we basically have a lot lower qualitative NPL versus the previous quarter, as we believe that we have done a lot already in terms of proactive NPL recognition. And as we are transitioning into a long-term debt restructuring solution, we're gonna let the NPL to flow somewhat naturally. And we expect still some more NPL to come in the second half, but the amount of overall NPL should be well under control, manageable if we manage our long-term debt work out well. Capital position remains very strong at about 17% level CET1, and we also have very high buffer on our balance sheet. Let me skip this to summary page and go right into NIM. In this quarter, we managed to stabilize our NIM. NIM improved, upticked a little bit from 3.01 to 3.04% for the quarter. And this is as a result of funding costs coming down a little bit and some mixed improvement in our balance sheet. So basically, we are utilizing our balance sheet somewhat more efficiently versus the previous quarter. Despite all this, yield on loans still under pressure. So let us go into the next page to discuss the yield on loan. Yield on loans on an average blended basis declined 4 basis points Q1Q. And within this slight drop for the retail segments. And this drop is basically we have some preventive actions that we need to do to protect, to keep our good quality customers on the housing loan. And also a certain group of the retail customers have already gone through the long-term debt restructuring. So we did have some small restructuring costs from the long-term debt restructuring. And we believe that this drop in the yield for the second quarter will be, we try to stabilize this and maintain the yield in the second half of the year. SME actually show solid performance in the second quarter. We managed to book some new loans, and despite of the soft loan program that we have in the second quarter, but overall basis, yield improved about 3 basis points on a quarter-on-quarter, and we saw a stabilization of yield on the corporate side. So overall, NIM dropped yield dropped 4 basis points on a quarter-to-quarter. On the loan growth, our strategy has always been to be conservative and not very aggressive in terms of balance sheet utilization. Loan up 2% on a year-to-date basis, and the main increase was actually observed in the SME segment. We got some new loan booking under the soft loan program, the second phase of the soft loan program. But other than that, the SME segment itself, we have identified good to grow sectors, and we managed to book some new customers in the SME portfolio, and basically in the sectors that Thailand still do well in food and beverage, some export oriented. So I think that's why we saw a 7% year-to-date growth in the SME loan portfolio. Retail segment, we witnessed some resilience in the housing loan demand, so up 2% year-to-date. Auto has been quite stable. Unsecured segment dropped a little bit on a year-to-date basis, basically because of the lockdown and some of the spending related. So that's why we saw some drop in the unsecured loan. Corporate sector, we have been very focused on quality, so we have not been quite aggressive, and some of the big projects large projects have been delayed in Thailand. So that's why the year-to-date loan growth in the corporate segment has been somewhat muted. So loan growth target for the whole year 3 to 5%. We probably see our loan growth coming in at the low end of the range. NPL for this year, for this quarter, new NPL was 12 billion baht versus previous quarter 14.6 billion baht. In this quarter, the percent NPL stabilized from the previous quarter at about 3.8%. As I pointed out just now, in this quarter, we didn't do much qualitative NPL because of the 104 billion baht NPL in our stock. Already roughly 33%, one-third, is on the qualitative recognition basis. And we believe that this is a very conservative numbers already. If you recall, since the beginning of the crisis, we have mentioned that the percent NPL or the risk in the relief portfolio would be high single-digit range. But we believe that if we continue with our long-term debt restructuring and we are successful in working with our customers to achieve a good results from the long-term solutions, so that so they can increase their debt servicing ability, we believe that the eventual percent NPL should be manageable for us. Coverage ratio remain very comfortable at 142%. In fact, for the whole year, we are looking at coverage ratio at above 130%. Credit cost 10 billion per quarter. We want to maintain the above average, above normal level for now, and we want to assess the requirement for this provision once we work on the long-term debt solutions. But we believe that 10 billion per quarter at 175 basis point, if things work out well, then this should be the upper bound for the rest of this crisis. Non-NII is continue to be the main focus for us. For this quarter, we booked about 13 billion baht of non-NII, and this is an increase of 4% year-on-year. It was a drop 10% Q-on-Q because simply on the non-recurring non-NII, we booked some special gain in the first quarter of this year. In this quarter, though, 2.4 billion is still a good number for us. You know, you can observe in the previous quarters, the range is from 1 to 2 billion baht. So the 2.4 billion baht non-recurring gain here basically made up of some gain, mark-to-market gain from SCB 10X, and this is about 700 million baht, 700 to 800 million baht. And we also have some trading gain in our book on the treasury side, and this is about over 1 billion baht. And on top of that, we have some gain coming out from our equity investment. So this is the non-recurring portion of the non-NII. On the recurring non-NII, 10.6 billion baht, up 27% year on year, and it was a drop of 5% Q on Q. It was a difficult quarter in the second quarter, but we have been working very hard. Our team have been trying to maintain the momentum that we saw in the bank card and wealth. For bank card business, we managed to edge up 7% on a Q on Q basis. Basically, with the good support from our partner, we deliver products that suit the market requirement, and we have been able to continue to improve the product mix, and that's why we see still some momentum in the second quarter. Wealth products, wealth management has been very challenging in the second quarter, so it was a drop of 25%. And the market itself was quite volatile in the second quarter. We probably will continue to see some pressure in this area. So the outlook for the third quarter, as I mentioned, it is very challenging right now. So bank card and wealth probably will see some pressure in the near term in the third quarter. But we hope that as Thailand, the vaccination programs gather momentum towards the end of the year and moving to next year, and things would be stabilizing. OPEX, 15.4 billion baht for the quarter, and this translated into a cost-to-income ratio of 42%. So we have observed a Q-on-Q decline for most of the key items. Some increase in the marketing expenses, but simply because we wouldn't read too much into the quarterly fluctuation. The range is 1 to 2 billion baht per quarter all along in the past year or so. We closed down our branches a little bit further this year, not as aggressive as in the previous year. Now, the number of branches that we have at the end of the second quarter was about 800 branches. Headcounts continue to come down a little bit, and that has helped overall saving in our cost base. But still, our intention is to restructure our cost base with the new digital initiative and digital migration, and we should continue to see our cost momentum to be well under control. In the second half, though, there could be, depending on the macro recovery, there could be some expenses going up towards the end of the year when economic activities pick up. We are still quite comfortable with our guidance, low to mid 40s, and this should be the target for this year. Liquidity is not a concern for us at the moment. LD ratio stabilized at 97% in the second quarter. Right now, given the crisis, we may see some liquidity coming in and put some pressure on our LD ratio, but we will make sure that we manage our balance sheet efficiencies going forward, and in order to maintain or stabilize our NIM. Capital position remain very solid. In the second quarter, though, you have noticed CET1 dropped a little bit from 17.1% to 16.8%. Basically, is the impact of the dividend payout in the first half, and we have some increase and some uptick in the risk-weighted asset from our investment asset and also certain new loan booking in the second quarter. But typically, going forward in the second half, once we do the net profit appropriation for the first half, then our CET1 ratio should be restored to around 17% level. So I think that's not something that we should be concerned. Given our strong capital position, we basically don't see the need for immediate capital instrument issuance. But we monitor the market movement quite closely. If there's a need or if we believe that the window of opportunity is really attractive, then we probably will decide on that basis. Financial targets that we provided at the beginning of the year remains unchanged. Looking at these targets, the ones that could be at risk would be or come in at the low end of the range would be loan growth and NIM. But on the non-NII growth, we believe that we could exceed this target a little bit. Cost to income ratio would be quite comfortable. NPL also should be comfortable within that range. Credit cost and coverage ratio should also be within our target guideline.